10% gain between now and the end of 25 would be quite nice. The idea is it's good to invest. It's good to invest in the United States. It's good to invest over time. And it's bad to try to mastermind it in the short run with get in, get out. Investing is a good thing. Do it early. Do it a lot so that you can build a nest egg.
The thing is, right now, we're seeing herd mentality. Moms and pops getting into everything that institutional investors are getting into. And usually, traditionally, historically, that's the time to get out.
Well, but again, I was with you until you said out. Because you know, just remember this, and everybody, you know, as I said, we're not market timers. We're not macro forecasters. And I told you that before the break, and I insist it's true. You could have said, if you had a great foresight, you could have said in 2019, I think there's going to be a pandemic. I'm going to get out. In 2021, you could have said, I think that Russia's going to invade Ukraine. I'm going to get out. In 22, you could have said, I think Hamas will attack Israel. I'm going to get out. You would have been right about the events, but it would have cost you a lot of money. And we not only do we never know what's going to happen in the bigger world, but we also don't know how the market's going to react. And so to be dogmatic and to say, it's high, I'm getting out, is a mistake. Warren Buffett, who always says it best, says don't bet against the United States, for example. And, you know...
but Warren Buffett has taken money off the table, more than $300 billion worth.
Why?
No, he says there's nothing to buy. Well, valuations are high.
Well, but what percentage? You know, people look and they say, well, Buffett sold some stocks. Does that mean we should get out? What percentage of his stocks did he sell? Probably rather small. So it's not a broad statement. You know, if it's a little high, and I say be less aggressive. If you wanted to sell 2 or 3% of your stocks, I understand. But Buffett's not selling all his stocks, and neither, I think, should anybody else.
Howard, you talk about how you hate making calls, right, you know, predictions, right, estimates, but Goldman came out to say that it sees a further 10% upside in the S&P, yes, from now through the end of 2025.
Yes.
Is Goldman right?
10.
10.
Well, that's pretty good, isn't it? I mean, on the other hand, Goldman, I think, it's fair to say, put out a report 3 or 4 weeks ago in which they said that the PE ratio on the S&P 500 is high. So as opposed to 10% average return over the last century, they're projecting 3% for the next decade. So that's rather cautionary. It's not get out, it's not sell, but it's, you know, moderate your expectations. On the other hand, a 10% gain between now and the end of 25 would be quite nice. Mm-hmm. So I think what this shows, Haslinda, is that investing in the short run is very uncertain, and nobody should think they really know what's coming. And most people should take an almost passive approach. The idea is it's good to invest. It's good to invest in the United States. It's good to invest over time. And it's bad to try to mastermind it in the short run with get in, get out. Now, if everybody gives up on getting in and getting out, you may lose a few viewers. But the point is, investing is a good thing. Do it early. Do it a lot so that you can build a nest egg. Don't screw it up.
How are you reading into the president's relationship with Elon Musk, for instance? You know, he's been put in charge of the Department of Efficiency. We saw Trump at Musk's event, SpaceX, just today. Do you read into the potential of perhaps how Tesla might play, you know, might gain from that? Do you see the potential of EVs gaining from that? How do you read into that?
Well, I'm not smart enough to know the answer to that question. I think that this is a very unusual situation, one we've rarely, if ever, seen before. A bromance, if you will, between a president and a founder of a company. There's no doubt about the fact that Musk is brilliant, idiosyncratic. People have been talking about increasing efficiency in government and eliminating fraud and waste for decades. I don't think anything's ever been done about it. And the question is, I assume that what's going on means that Musk will do more about it than has been done in the past, and then we'll get to see whether it works. But, you know, this is just one more thing, which is so unpredictable and indeterminate that I don't think it's worth most investors doing anything about it.
So no point piling into Tesla.
No, this is no. The reasoning through which Trump's relationship with Musk and Musk's role in government produces an improved outlook for Tesla is very attenuated. I wouldn't go there.
Elsewhere in the world, China has been front and center. We've seen stimulus in an attempt for China to revive the economy. Do you think China's doing enough? I mean, I know you see value in some Chinese stocks.
China is attempting something very difficult. They had what I call the Chinese miracle. They had 10% GDP growth a year for a few decades when they were coming into the modern era. A lot of that, or some of it, was built on stimulus. You can't stimulate your way to growth forever. They've tried to back off on the stimulus, but that has caused a growth slowdown that they don't want to have the full brunt of that slowdown. So they're trying to kind of calibrate. That's the word I use in many cases. They're trying to calibrate the right amount of stimulus to produce a good growth, but not an excessive reliance on stimulus. And stimulus sometimes leads to unwise behavior. It's not easy to get it right. I'm hoping they will. I know they're dedicated to the task. They understand the importance of 5% GDP growth. And let me just say, 5% sounds like a slowdown versus 10, but it's a well above average growth rate compared to the rest of the world.
But you talked about how it's challenging for China.
Yes.
It's attempting something that's so difficult. Why
Yes.
isn't China a value trap? Why is it still, you know, full of value?
Well, I think because first of all, it has great potential to come into its own. You know, I mentioned before that the U.S. situation is doing well, but high-priced. The Chinese situation has fundamental questions, but it's bargain-priced, which is better. You know, you can't. It's all investing. It's a matter of relative choices.
Where do you see value in China?
Oh, you know, I'm not close enough to the operating level to be able to talk about.
Have we seen the
industries or
end of the
companies.
crisis in the property sector, for instance? Is there a sense that, because it takes a recovery in the property sector to actually revive investor sentiment and confidence?
Well, you know, anytime you have an amount of building which is highly stimulated by the availability of capital, then you have to go through a period of adjustment in which the buildings that have been built are absorbed. And some have to be repurposed, some you have to grow into that space. And that doesn't happen overnight, and it doesn't happen because the government turns a policy lever. It's going to take some time. The question is not whether they have to do it. The question is, will it bottom out? Will they stop adding excessively to the property stock, and will they put in place policies designed to create the absorption? My bias is that they will, and you know, many people in the investment community describe China as uninvestable. To me, that word is music to my ears. I've made my whole career buying assets that other people consider uninvestable. And when you do that, you have a chance of getting a bargain. So I think that clearly China is on the pile of things that people feel ill about, and it's on that pile that you find the bargains. That doesn't mean that you should buy everything on the pile, but that's where you look for the cast-offs and the bargains.
So you've been adding to your positions in China?
Well, we have a good position in China, and have had for a long time.
Can you share some of that position in any way?
No, I don't go into names. But you know, we're continuing to invest in China carefully, and you know, when the fundamental situation is uncertain, you have to take care. but the availability of assets at beaten down prices is a great starting point.